The pound to the euro, the dollar to gold. What are Forex correlations and how do you use them to make money? Let me tell you. What up, folks? It's your boy, Ed Cat, coming at you with another video. Go ahead and like, share, and subscribe. Do that YouTube thing, because a lot of you be watching, but you don't be subscribing. Come on, fam. Come on. Help a brother out. Help us grow. Go ahead and hit that share right there. Somewhere. Hit the button. I'll wait. I'll give you 2 seconds. Okay, cool. Thank you. Going on to the video. All right, in today's video, we're talking about correlations. How does the dollar affect the yen? How does the pound affect the euro? In trading, we are trading currencies and commodities against each other. And a lot of them have correlations with each other that can help you determine if your bias for the day is correct. So in trading, Forex pairs can be either positively correlated with each other, inversely correlated with each other, or not correlated at all. A positive correlation out of a score from 0 to 100 means that as one pair moves up, the other pair is going to move up with it. The closer you get to a 100% correlation, the closer those positive moves are going to be with each other. You can also get a negative correlation from a score of 0 to minus 100. The closer the score is to minus 100, the closer matched that inverse relationship is. So when one goes up, the other one goes down. They are inversely correlated. And then you can get a zero correlation, meaning these two pairs are not linked in any which way. One goes up, the other one goes up, one goes down, the other one continues to go up. They do not match their moves whatsoever. So either positive correlated, no correlation, or inversely correlated. So looking at this chart on the daily time frame, looking at all the major and minor pairs together, you can see that Euro USD and GBP USD are 97% correlated. What that means is on the daily time frame, these pairs are going to move in the same direction with a similar kind of volatility 97% of the time. They're 97% correlated on the daily time frame. So what that means is if you are holding a position on Euro USD on the daily time frame, if you want to hold a similar position on GBP USD, you're essentially hedging on the same bet. You're trusting that your bias on one is going to be correct for both. So if you are correct, you can multiply your profits for the day. But if you're wrong, you're going to be multiplying your losses for the day. So you're essentially making the same bet twice because these two pairs, at least on the daily time frame, 97% of the time move in a similar direction. But depending on your time frame, this can change. So as you can see on the 4-hour chart of correlations, this correlation drops down to about 51%. On the hourly, it rises back up to the 90%. On the 5-minute, drops down to the 50%. So it all depends on if you are doing longer trades or shorter trades. You can hedge positions against each other, but overall, these two pairs are highly correlated with each other. So making a trade on both of the pairs simultaneously is you doubling up on your risk, either for potentially more profits or for potentially more losses. So because of these correlations between the pairs, you need to now make decisions on your risk management and how you're going to choose to trade. So you can either manage your risk, go ahead and make the same bet on multiple pairs that are highly correlated, but manage your risk in such a way that if all of these go wrong, you are still only risking a total amount that you're comfortable risking because you are essentially risking this on the same bet. What you can also look at is look at pairs that are not very correlated with each other at all and trade those simultaneously. That way, if you're not making the same bet across multiple trades. Using the 15-minute as an example, you could make a trade on GBP USD and New Zealand dollar yen, and you could comfortably make those two trades simultaneously while risking whatever your risk amount is per trade, comfortably knowing that those two currencies are only 5% or negative 5% correlated with each other, meaning that there isn't a big correlation. You're not making the same bet twice. So that is one way you could go about it. Those are two different ways you could go about it on how you can trade these correlations with each other. Another way you could look at the correlations between pairs is by using the compare tool on TradingView. Let me show you. Looking at Euro USD on the daily time frame, you can notice the overall trend and pattern that price has been printing in the last while from, let's say, March of 2021 till today, May of 2024. If you compare that to, let's say, the New Zealand dollar Swiss franc, you can see using the compare tool how these two pairs are somewhat correlated to each other on the daily time frame. Their trends tend to mirror each other somewhat, but you do have situations like here in January of 23 where there is some divergence. So these are positively correlated, but not at 100%. There is a little bit of divergence that goes on the daily time frame. If you compare that, however, to if we take the New Zealand dollar Swiss franc out of the equation and add GBP USD, you can see how the correlation between these two pairs is a lot tighter. They are far more correlated with each other and tend to move with the same trend more often than not. So you can see how these two way better correlated, and that correlates or corresponds with how it is represented on that table. There you have it, folks. These are how you can use correlations in trading to up your edge and make you more profitable. You have to decide whether you're going to hedge your bets by making the same bet across multiple currencies, or you're actually going to have a more aggressive risk management style and avoid making the same bet twice over correlating currencies. There is no right or wrong answer. You have to find out what your particular edge in the market is and work with that. And that is the video for today, folks. If you learned something new, go ahead and hit the like button, hit the subscribe, and go ahead and pop in the comments what I should do next. Hope you guys are having a very profitable quarter, and I will see you in the next one.